The gold market had been behaving very, very weakly for several months before this happened. And anyone who's followed gold for any period of time knows that when there's a break, it's hard and severe. And a lot of times that really presents a good buying opportunity because you clear out all the weak hands that are in the market.
Sterling, what is influencing gold prices the most right now? Technicals? Are traders following technical signals, or is there something else going on that we just don't see that easily?
Well, there's two things. One, I think the technicals are strong. The market came down, hit a support area that it needed to hit, and has come back up to a pretty good retracement level. We do need to stay above 1,400 an ounce, though, in order to keep this momentum going. The second thing is there's good physical demand for gold. When the market broke hard, that created a buying opportunity for a lot of people in the physical market who buy small amounts of gold, who had been kind of on the sidelines for a while and not buying in the same amount that they had been. So we do have two dynamics working to help push the market up. To put the third leg in that stool, we're going to need to see some sort of continuation of Fed easing or a global easing program going on, either coming out of Europe and Japan, that puts the fear of inflation back in the market, and then you'll have three legs for the market to sit on.
Well, to that point, the last point that you made about the macroeconomy and central bank policy, in that kind of a world, to what degree do the incremental changes in physical demand for gold matter?
Well, they don't matter so much on the way up, but they do matter at a bottom. When we see prices break hard, they can be the buyer of last resort, and that's what puts the floor in the market. The way we trade the futures contracts now with the electronic marketplace and things move a lot quicker. So when you bring in that physical demand, that brings in stability. So it's important at the bottom. On the way up, it is not nearly as important.
Is there an inflation bet to be deduced from what we've seen in the price action of gold?
Well, I don't know if it's a bet or more of a hope. Gold's favorite food is inflation. And until we see that, we're not going to be able to really propel the market up into new highs. But there's enough concern about inflation where you can get people putting some money in at prices they think are favorable.
Sterling, you mentioned a few minutes ago that gold needs to stay above $1,300 an ounce for, the current sort of trend to continue. Where is support below $1,300? How much further could it fall if it drops below that level?
If we fall through the 1,400 level, which I think for right now is key, and we break back down to that 1,300 level, there's a little bit at 1,308. After that, we're probably looking at a market that's on its way to about 1,215.